Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So now I'm doing the next problem, that is problem number 6 on financial statement of manufacturer. Already 2 videos I have prepared on the theoretical part of manufacturing organizations, how the financial statements will be prepared by a manufacturer. Then 2 videos I have already uploaded on short questions and MCQs on manufacturing concerns. Hope you have already watched the theoretical videos as well as the short questions videos and got some perfection regarding what is the meaning of the term manufacturing organizations, how they will make. Now 2 videos I have already uploaded on 5 main problems on manufacturing organization. Now I am going to start the next problem number 6. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep ready the problem before watching the video. Take the screenshot of the complete solution of 6th problem, then I'll explain all the points in detail. Now, see the 6th problem. Iromi, a manufacturer of bicycles, has provided the following information for the year ended 30th April 2019. So, Iromi is the sole trader manufacturer and they have provided the complete information during the accounting year ended 30th April 2019. Inventory on 1st May 2018. The year begins from 1st May and ends on 30th April. The beginning 1st May 2018, inventory of raw material, inventory of work in progress, inventory of finished goods. Opening inventory, all the 3 items are given: raw material, work in progress and finished goods. Purchase of raw material, return inwards. Return inwards means sales return. Sales return will go to income statement, not in manufacturing account. Then return outward is a purchase return. It will be deducted from purchases in manufacturing account. Then carriage on raw material. The carriage on raw material will be added to purchase of raw material. Listen, always whenever you watch the video, always keep a notebook beside you and a pen. When I say something, immediately you write it down. Then only you can be able to remember for a long period of time. Otherwise, you will forget it. So this carriage on material, that will be added to purchase of material in manufacturing account. Wages. Wages, if nothing is given, we assume it is a factory wages, direct wages. It will be taken under prime cost. Then factory machinery cost. Factory machinery accumulated depreciation. Actually, cost of machinery and accumulated depreciation on machinery, both these items will go to statement of financial position. But here information is given to calculate depreciation. In working note, we calculate depreciation by using this cost of factory machinery and accumulated depreciation of factory machinery. Factory power, this will be taken under indirect factory expenses. Then heating and lighting, that also again indirect factory expenses. Rent and rates and insurance, all these will take under factory indirect expenses. Inventory on 30th April 2019, this is the closing inventory, end of the year. Inventory of raw material, inventory of work in progress, inventory of finished goods. Now next page, additional information. Heating and lighting, rent and rates and insurance are to be apportioned 3/4 to the factory and 1/4 to the office. That means these 3 expenses, heating and lighting, rent and rates and insurance, these 3 items have to be segregated. 3/4 should be taken under indirect factory expenses and 1/4 should be taken to office expenses, that will be taken in income statement, not in manufacturing. So 3/4 factory and 1/4 income statement. Wages to be apportioned 4/5 as direct wages and 1/5 as indirect wages. So how much are the total wages given? Total wages 84,500 are given. So we have to bifurcate. 84,500 into 4/5. That will be taken as direct wages. Here you can see wages. Direct wages 84,500 into 4 by 5, that is 67,600. 67,600 are the direct wages that will be taken under prime cost. And 1/4, 84,500 into 1 by 5, that is 16,900. That will be taken under indirect factory expenses. So here you can see direct wages 67,600 and indirect wages 16,900. These indirect wages are taken under overhead. Overhead means indirect factory expenses. Then next comes the factory machinery is to be depreciated at 20% on the reducing balance method. In working note, we have to calculate depreciation. Reducing balance method means we have to deduct accumulated depreciation from cost. Cost minus accumulated depreciation is equal to net asset value. On that net asset value, we calculate 20% depreciation. Here you can see. Depreciation is 20% on reducing balance method. The net cost of machinery is 80,000 minus 43,040. So you will get 36,960. That is the net asset value. On this net asset value, we calculate depreciation 20%, 20 by 100. So it comes to 7,392 is the depreciation on factory machinery. So under indirect factory expenses, under overheads, you can see depreciation 7,392. Here I have calculated 7,392. Next, finished goods are to be transferred to income statement at 25% markup. So there is a procedure in the factory. The manufacturer is applying one procedure. The procedure is 25% profit will be added on the total cost. And after adding this 25% on total cost, then transfer price. At this transfer price, we transfer it to income statement. The total of the production cost will be transferred to income statement. Now specifically given whatever production cost you got, on that production cost 25% markup you add up. 25% markup you add up, then you'll get the transfer price. At this transfer price of production cost will be transferred to income statement. Then A, B, C, D, 4 questions are asked. A, explain the difference between each type of inventory. Each type of inventory. 3 types of inventory are there: inventory of raw material, inventory of work in progress, inventory of finished goods. Now we have to find out what is the difference between these 3 types of inventories. First of all, raw material. The raw material is the basic crude unprocessed material which is on which the work has not yet been started. The material is purchased and kept in the stores, not at all started using it. That unprocessed material, unutilized material, crude material on which work not yet started, that is called inventory of raw material. So raw material inventory is the stock of crude or unprocessed material that can be converted by manufacturer into saleable goods. So after on, we convert that raw material into finished goods, but presently not yet work started. Next, work in progress. The second type of inventory is inventory of work in progress. The work in progress consists of raw material inventory which has started the manufacturing process. Some material are there on which work is already started, but the work is not completed. The work is still going on. That means unfinished work. That is called work in progress. So are no longer included in the raw material stock, but have not yet reached a stage where they are saleable condition. They are neither the raw material nor the finished goods. The semi-finished goods are called work in progress. Neither raw material nor finished goods. The material on which the manufacturing process is already started, that is called work in progress. Now last is finished goods of inventory. That means those goods on which work is 100% completed. The goods are in a saleable condition, ready for sale. So those items on which work is 100% completed are called finished goods. So finished goods inventory are the goods which have completed the manufacturing process and are available to be sold. These are the three different types of inventory. So in examination, very frequently a question will be asked, explain the three types of inventories. So just now I have given the explanation. Now B point. Prepare the manufacturing account for the year ended 30th April 2019, clearly showing the transfer to the income statement. Second question, it is asking you to make the manufacturing account and show what is the cost of production to be transferred to income statement, right? Now, already in last two videos, I have explained you how to make the manufacturing account. Here again, I am explaining. Manufacturing account for the year ended 30th April 2019. First of all, material consumed, direct wages, direct expenses. These three combined together constitute prime cost. The material consumed is not given in the problem. We have to find out the material consumed. How to find out? Take the opening inventory of raw material. In the beginning itself, it is given opening inventory of raw material 20,000. So opening inventory of raw material 20,000. To this we add purchase of raw material. So here it is given purchase of raw material 84,000. So I have taken purchase of raw material 84,000. Some carriage inward on purchasing the raw material. It is given carriage on raw material 4,100. Transportation cost to bring the material, that is called carriage. So carriage will be added, carriage inward 4,100. Now add up opening inventory, purchase of raw material, carriage inward. We get 1,08,100. From this, we subtract closing inventory of raw material. Last line in the problem, it is given raw material 18,600. This is the closing inventory of raw material 18,600. Subtract. So 105,600 minus 18,600, 87,000 rupees is called material consumed. Material consumed. Now next we'll take direct wages. The total direct wages are given 84,500. But in the adjustment is given wages to be apportioned 4/5 direct wages and 1/5 indirect wages. In working note I have segregated. Direct wages 84,500 into 4 by 5, 67,600. That 67,600 I have taken here. Because these are direct wages. And indirect wages are 84,500 into 1 by 5. 4/5 direct, 1/5 indirect, given in the problem. So 1/5 comes to 16,900. That 16,900 indirect wages will be taken under overheads, right? So direct wages are. Now add up material consumed plus direct wages. 1,54,600 is called prime cost. Now prime cost, we add indirect factory expenses, or simply we can call it as overhead. In overhead, indirect wages, just now I told you total overheads are bifurcated into direct and indirect. Direct wages I have taken here, indirect wages. Apart from that, we are given in the problem this one, factory power 2,500 I have taken same as it is. The next one is depreciation, 20% following reducing balance method. So here in working note I have calculated 20% on RBM. First of all, when we follow RBM, reducing balance method, we want the net asset value. What is net asset value? Cost minus accumulated depreciation. The cost 80,000, accumulated depreciation 43,040. Subtract 36,960. This is the net value. On this net value, 20%, 20 by 100, 7,392. So 7,392 is the depreciation. Now it is given in the problem, heating and lighting, rent and rates, and insurance. All the three items, the adjustment is given. Heating and lighting, rent and rates, and insurance are to be apportioned 3/4 to the factory and 1/4 to the office premises. That means whatever expenditure related to office will go to income statement, will not be taken in factory. Remaining 3/4 will be taken under factory. So we have to bifurcate. So in working notes you can see here, heating and lighting totally is given 4,500. 3/4 should be taken in factory. So I'm taking 3/4 of 4,500, 3,375. So you can see here 3,375. Heating and lighting. Rent and rates. Rent and rates also 3/4. So here you can say rent and rates 3/4 into 1,05,000, 10,500. It comes to 7,875. 7,875. Insurance. Insurance is given 4,500. Oh, sorry, 6,000. Insurance 6,000 into 3/4. 4,500 insurance. That's all. Take the total of these indirect factory expenses, 42,542. This is the total of indirect factory expense. To this we add opening work in progress. In the beginning it is given opening work in progress 4,300. Remember opening WIP added. So 4,300 I have added. 46,842 minus closing work in progress. Last line closing work in progress 1442. Deduct 1442, you will get 45,400. Now you add up 154,600 is the prime cost and 45,400 is the overhead. You add up both 2 lakh. 2 lakh rupees is the production cost. If nothing is given in the problem, we would have transferred this 2 lakh rupees to the income statement. We will transfer 2 lakh rupees to the income statement. But one sentence is given there, last point. Finished goods are transferred to the income statement at 25% markup. That means we have to add an internal profit of 25%. And after adding 25%, transfer it to income statement. So specifically that sentence is given. That's why I am adding the markup. So add factory profit. How much? 25%. So 25% of 2 lakh, it comes to 50,000. 25% of 2 lakh, 50,000. Now you add up 2 lakh plus 50,000, 2 lakh 50,000. This is the total cost of production to be transferred to income statement. That's it. So specifically given 25%, that's why we are adding. Otherwise, directly we would have taken 2 lakh rupees. That's it. So 2 parts we have completed. A part differences between in different inventories, and next one manufacturing account. The third question is state one reason why Iromi might purchase finished goods. Normally, a manufacturer will produce finished goods. It will not purchase finished goods. But sometimes a manufacturer will also purchase the finished goods. So it is asking you when a manufacturer will purchase the finished goods. Under what circumstances the manufacturer will purchase the finished goods. So it is asking you only one reason, but I am giving you here 3 reasons for your benefit. The first, machine breakdown. Sometimes all of a sudden there is a machine breakdown and we have to supply the finished goods. We cannot be able to make the finished goods because the machine broken down. In that case, the manufacturer will purchase the finished goods. First situation. Second, to meet an urgent order. Sometimes a customer requires urgent goods, but to manufacture it will take some time. To produce the goods, it will take some time, but our customer needs urgently. So in that case, we purchase the finished goods. Thirdly, cheaper to produce than manufacturer. Sometimes some manufacturer finds that to produce one item, it is costlier. The same item we can purchase it from outside. So why to manufacture that item? We can purchase it from outside. So these are the 3 situations where a manufacturer will purchase the finished goods rather than producing. That's it. C bit completed. Last, D bit. Evaluate the use of reducing balance method of depreciating the factory machinery. Actually, depreciation we have 2 methods, straight line method and reducing balance method. Normally, reducing balance method will be used for plant and machinery. Now it is asking you to evaluate this method, why this reducing balance method is adopted for plant and machinery, right? So here, the explanation I have given like this. Use of reducing balance method of depreciating factory machinery. First one, the RBM. reducing balance method will charge more depreciation in the earlier years of the machine when maintenance and repair bills are likely to be lower. According to RBM method, initial years, beginning years, more depreciation, later years, less depreciation. In the beginning, we have more depreciation, but repair and maintenance will be less. When the machine is new, it does not require more maintenance, repairing, etc. So what will happen? In the initial years, the repair and maintenance are lower and depreciation will be higher. In later years, what will happen? Depreciation will be lower, but maintenance and repair bill will be more in later years. So it will make a balance. That means there is a balance between depreciation and repair and maintenance in the beginning year and end of the year. That is the advantage of using RBM method for depreciating machinery. Secondly, the straight line method of depreciation will result in equal amount of depreciation expense being charged each period, which accurately reflects the actual use of machine in each period. Secondly, you can see in straight line method, SLM. In straight line method, equal amount of depreciation will be charged every year. Same amount of depreciation every year. Assuming that we will get the same benefit from the machine every year. That is the second point. Third point, SLM depreciation considers the residual value of the machinery that could be obtained when they are at the end of their economic life. In straight line method, we use the residual value, scrap value of the machinery at the end of its economic life. In straight line, increasing the accuracy of depreciation expense. That means by using the SLM method, the depreciation will be more accurate because we consider the residual value of the machine at the end of its economic life. Whereas no residual value will be considered in case of RBM. Last one is, as the machines are not likely to benefit each accounting period equally, it might be more appropriate to depreciate the machinery using RBM. See here, the benefit from the machine will not be equal every year. In beginning of the years, we get more benefit, later years will get less benefit. So in that case, it would be appropriate to apply RBM because more depreciation will be charged in the initial years and less depreciation will be charged in the later years. That's all. So this is the explanation regarding RBM method for depreciating the factory machinery. So in this problem, I have explained you 3 points. First, I have explained you about the differences between three types of inventories. Secondly, I have prepared the manufacturing account. Thirdly, what are the reasons why a manufacturer will purchase the finished goods. And lastly, the use of reducing balance method to depreciate the machinery used in factory. That's all. So inshallah, we will continue the next problem in the next video.